Bitcoin has had a strong start to 2025. But what's really driving this price action? In this video, we'll uncover the hidden forces behind Bitcoin's rise and why this could be just the beginning. We'll look at the explosive rise in institutional demand and what it means for Bitcoin's future. And we'll break down why the derivatives market is signaling that demand is measured and sustainable. Bitcoin has had a solid start to 2025, closing January with a 9.7% gain at 102,000. But what's even more important than the price increase is where Bitcoin is holding relative to key technical levels. Looking at the Bitcoin mean reversion chart, you can see three major support levels that Bitcoin has successfully stayed above. First, the short-term holder cost basis, sitting around $92,000, represents the average price at which recent investors acquired their Bitcoin. When the market holds above this level, it signals that new buyers are not selling at a loss, which is generally a bullish sign. Then, there's the 200-day moving average, currently at $77,000. This is a widely followed indicator in both traditional and crypto markets. Historically, when Bitcoin trades above this line, it's considered to be in a long-term uptrend, showing sustained market strength. And finally, we have the on-chain mean at $63,000. This represents the average cost basis of active Bitcoin investors. If Bitcoin's price stays above this level, it suggests that most investors are in profit and not under pressure to sell, reinforcing a healthy market structure. Now, what's interesting is that on the 2nd of January, Bitcoin briefly dipped to its short-term holder cost basis as global markets reacted to renewed tariff concerns. Risk on assets, including Bitcoin, saw a temporary pullback, but buyers quickly stepped in, pushing the price back up. This kind of rebound off the short-term holder cost basis is a strong sign of market confidence. Overall, Bitcoin's ability to stay above these critical support zones reinforces a healthy market structure heading into the next few months. Since late November, Bitcoin's price has been consolidating between 89,000 and 109,000, moving within this range as the market digests previous gains. Behind the scenes, Bitcoin held in US spot ETFs has surged to a record 1.17 million BTC. This growing accumulation signals strong institutional demand, even during periods of price consolidation. Spot ETFs hold actual Bitcoin, unlike futures-based ETFs, meaning each new dollar invested reduces the available supply in the market. With Bitcoin's fixed supply of 21 million coins, this increase in institutional demand can significantly impact future price movements. Historically, when large holders accumulate during consolidation phases, it has often preceded major price breakouts. So while Bitcoin's price may be range-bound for now, this record ETF accumulation is a strong indicator that institutions are continuing to adopt Bitcoin as a long-term asset. If this trend continues, it could set the stage for Bitcoin's next major leg higher. If you're finding these on-chain insights valuable and want to stay ahead of the game, hit the like button, subscribe to the channel, and turn on notifications so you never miss an update. Now let's dive back into the analysis. Since 2023, stablecoin supply has been steadily increasing with very little interruption. More stablecoins in circulation translate to more purchasing power for traders and investors, as assets like Tether and Circle are ready to be deployed into Bitcoin at any time. Historically, when stablecoin balances increase during consolidation phases, it has often signaled a buildup of demand, setting the stage for Bitcoin's next major move. With stablecoin supply continuing to rise, this could act as fuel for Bitcoin's next rally, indicating that capital is waiting on the sidelines, ready to move into Bitcoin when conditions align. Bitcoin's long-term holder realized profit and loss ratio is showing positive momentum, which is a promising sign for the market. This metric tracks the ratio of profits versus losses realized by long-term holders. Currently, that ratio remains firmly in the green. What does this mean for us? In simple terms, it shows that long-term holders are realizing more profits than losses, signaling bullish market sentiment. What's even more encouraging is that short-term profits are outpacing long-term profits, suggesting healthy recent demand driving price action. More buyers are entering the market, locking in profits, which signals that momentum is building in the near term, a typical pattern during a bull market. As we can see on the chart, this positive momentum is a strong signal, with long-term holders capitalizing on their positions at a healthy pace. With this trend continuing, it indicates that the bull market conditions are not a short-term anomaly, but a reflection of sustained growth and interest in Bitcoin. The derivatives market offers valuable insight into the demand for Bitcoin. Since December, the premium on Bitcoin perpetual futures has actually fallen below the premium on 3-month futures. This is an important trend because it shows that the derivatives market is not overheated, which is crucial for long-term stability. The key factor here is the relationship between perpetual futures and 3-month futures. When the premium on perpetual futures drops below that of the 3-month futures, it indicates that the market's appetite for immediate long-term contracts is more balanced. In essence, there's no sign of irrational speculation pushing prices higher. Another aspect to note is the positive funding rates in the perpetual futures market. This means that long contract holders are paying shorts on a recurring basis, signaling that long interest in Bitcoin is measured, not excessively bullish. These signals suggest that demand for Bitcoin is steady and sustainable, not driven by speculative exuberance. Looking at the chart, you can see how these premium dynamics have shifted, reinforcing the idea that the market is in a more rational state, with growth supported by measured demand. So, to wrap things up, Bitcoin's ability to stay above key support levels, such as the short-term holder cost basis and the 200-day moving average, is a solid indicator that the market is in a strong, healthy position. These critical levels suggest that investors are feeling confident and are not under pressure to sell, which is fantastic news for Bitcoin's long-term outlook. We also can't ignore the growing institutional demand, with spot ETFs holding a record amount of Bitcoin. This shows that institutions are not only still buying, but they're strategically positioning for the long haul. Even during periods of price consolidation, the steady accumulation we're seeing sets the stage for future price movements as these large players continue to adopt Bitcoin as a core asset in their portfolios. Finally, looking at the derivatives market, we see that demand remains measured and sustainable. The falling premium on perpetual futures and the positive funding rates point to a balanced market, where investors aren't over-leveraged or chasing short-term profits. This type of stable demand reinforces our confidence that Bitcoin's growth is not only sustainable but poised for continued upside, as long as these favorable conditions persist. And that's all for today's analysis. Want more in-depth insights on today's topic? If you prefer written content, join my free newsletter for exclusive analysis. Click the link in the description. Thanks for tuning in, and I'll see you in the next one.